All right.
Right. Good morning, everybody.
Good morning.
How everybody doing?
Good morning.
Good morning. This is our first virtual sales meeting for Powers Ferry. And interesting times. It's great technology. Very interesting why we have to use the technology. But nevertheless, just want to check in. As you guys know from Maximum One, our offices are open. The Powers Ferry office has, Vivian is there from 10 to 2 every day, but you guys all have 24/7 access with your key fob. The Douglasville office does not have any full-time staff, and the Paulding office does not have any full-time staff. But the other ones, you have West Cobb and Woodstock have full-time staff Monday through Friday. I'm going to mute everybody right now, 9 to 5. So I hope everybody is doing well. Couple things, please, 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 you guys read the Sunday emails. We are posting vital information for you guys in those emails. And also I have created a folder in the reference section of Paperless Pipeline that says COVID-19 forms. So you will see all kinds of forms there. We have a showing protocol. We've got a buyer's brokerage addendum, and we've got all of the other information that you will need, the GAR, special statement, so forth and so on. But I want to just go ahead and get started. Basically, the main crux of this meeting, I want John and Christina.Bohannon to talk about all the craziness that is going on with the lending institution right now. And then when our attorneys hop on here, we will have them comment on what is going on with the closings and how we are managing all of that stuff. And John, I'm going to unmute you, and I'm going to let you go ahead and start and let us know kind of what is going on and what our agents need to know.
Okay. Well, good morning, everybody.
Good morning.
It's great to see everybody's faces. You know, this is becoming more and more normal, so we're getting more and more used to it. My company's done a lot of these Zoom meetings for like a year or so, so I'm used to being on them. It's just like new. A lot of people are now adapting to it, and I'm grateful for this great technology. Hopefully we won't have to be like the Jetsons for much longer, but we'll get used to it. So first of all, I just wanted to say how much I appreciate all of you, and I appreciate what you guys are going through. And as a company, our company's owned by 2 former realtors, so we really we care, and we're built for realtors. That hasn't changed, and that's not going to change. And our industry has gotten, I think, and our owners would say this, some banks have taken, fairly drastic measures. We have not. And I just wanted to share those with you so that you can be prepared for, be able to determine the difference between fact and fiction, because there's a lot of it, and even the news is getting it wrong. So if you have more questions, you're welcome to put them in the chat box, and we'll try to answer them via chat or answer them verbally as you post them up there, because we have the chat box. I don't know if you guys see it, but it's down at the bottom. There's a chat box, so you can ask questions, and I'll be happy to answer them as they're coming in. But I've prepared about a 15 to 20 minute, just an explanation of what's going on in the industry and what's going on with our company and what you can expect, and what how to advise your buyers and your sellers, because I realize you guys probably have sellers that are thinking, oh my gosh, is the sky falling? Should I sell my house? What's it going to take to get my house closed? There's people that are not really waiting, that are moving forward right now, and kind of all in the mix. So anyway, I just want to kind of give you a little bit of the lay of the land. And again, you're always welcome to call me, text me, email me anytime. And even if I'm not doing the loan, I'll be happy to help you with whatever your issue or your hurdle is. So with all that being said, I first want to say that Movement is still lending at all loan amounts except for jumbo. We have a new way of doing jumbo, which I'll explain in a minute. We're lending at all loan amounts. We are here for you guys. We're still closing loans in 30 to 40 days. and we are prioritizing purchases.
We're getting purchases underwritten. I think literally we've gotten stuff back in 2 days. We've gotten approvals back in 2 days on purchases, which is unheard of right now in the market. I mean, so many places just backed up.
Yeah, we basically, as everybody knows, there's a big refi boom. Well, what we did with that was we told everybody that wanted to refinance, it's going to take you 2.5 months for us to close your refinance loan, because we wanted to keep all the purchases being able to close in 30 to 45 days. So right now, our closings are running right at 30 days. Our underwriting turn time is 1.5 days for the first approval. The second approval runs about 3 days, and the clear to close takes about 2 days. So there's times where we stop and start in between there, where we're waiting on title or homeowners insurance or inspection amendment or that type of thing. But we're still running about 7 days operationally for our piece of the work with those gaps in between. So as of right now, and I don't knock on wood, no offense if you do, but I haven't missed one closing because of the COVID. All of my closings have happened that are purchases right on time. Had one that was gonna close on Wednesday, and we got it cleared to close yesterday. And that guy was driving down from New York, where that's kind of been the heartbeat of the virus, and he decided to delay the closing by 2 days on his own because he's driving down. He doesn't want to fly. But we were ready 2 days beforehand. So that was the only one that was a little bit concerning to me. Appraisals with our company are running about 7 calendar days, and VA appraisals are running about 10 calendar days. So it's a lot business as normal for us. We are allowing POA letters. If somebody doesn't want to attend closing, the closing attorney, for the first time ever, is allowed to sign for the borrower. So the borrower does not have to go. And I know our preferred attorney will share what they're doing, but a lot of attorneys are doing that, or they're doing curbside closings and a lot of other things. But we're accommodating purchases almost like nothing has happened. I realize things have, but we're doing the best we can to keep it like that. We're seeing appraisal values come in strong. No real interruption there as far as values go. As far as guidelines go, we're not doing any loans below a 640 credit score. That's our biggest change. We think that's going to be a temporary change. We'll see. We're evaluating it month by month, but anybody who's got a 640 credit score can get a mortgage. You're not hearing that, and you guys may have heard that Chase yesterday decided no loans below a 700 for most people and requiring 20% down. That was on national news. So you're going to see banks do that. And the reason that they're doing it is because they're at a very big decision point on what they're going to do with the CARES Act. The CARES Act is a COVID relief act for homeowners that allows them to not make payments for 6 months initially, and they don't have to qualify for it. In the past, when somebody wanted a loan modification or a short sale, they would have to provide some type of documentation of loss of income or hospitalization, something that was a big issue in their finances. Now, all they have to do is call their lender and say, I was affected by the COVID and I'm not going to make payments for 6 months, and the lender has to say yes. So because of that, banks that have been retaining the loan and keeping that loan on their books are faced with not being able to get payments for 6 months. So those are the banks that you're going to see the biggest changes from. Up until this point, Movement has not serviced any loans except for a handful. Now we are servicing loans because we have to. The 2 biggest servicers in America stopped servicing loans about 2 weeks ago. They stopped taking on new ones, I'll say that. They're still servicing, they're just not taking on new loans to service. So because of that, you're seeing these disruptions and changes in the guidelines. Those are the biggest ones that we have as a company have done, is no loans below 640 and no jumbo loans. We can still do jumbo loans if they're a VA. VA loans can go all the way up to the sales price, no matter what the sales price is, $1.5 million, $2 million, whatever, as long as the borrower can qualify. The veteran can borrow 100% of the financing on those. So the CARES Act is what's driving all these changes in the mortgage business, and it will vary from bank to bank. If you guys remember back during the housing crisis, You heard a lot of talk of things called overlays. That's where a bank would put on an extra rule or an extra guideline over what the government guidelines were. And the government guidelines were created by Fannie Mae and Freddie Mac. Well, you're going to start seeing overlays. So you're going to see guidelines change from bank to bank to bank based on how they're interpreting their risk and how many of their customers are not making mortgage payments. So it's important to know your lender, know what they're doing. I think at this point in time, having a borrower pick their lender is more risky than ever because they don't know these things. They're picking because it's their brother-in-law works there, or that's who did their loan last, or that's who's offering the lowest rate. And I'm seeing borrowers now, be surprised by things that they didn't plan for.
Yeah, there's like strung along for 3 weeks, people telling them they can get a loan literally for 3 weeks. And then we get a phone call of an emergency loan rescue because they obviously, when we look at it, we knew they never looked at the credit, because we can look at it within like 5 minutes and tell you exactly what we can do and how we structure it. We saved the loan, we were able to restructure it. But we feel for those people that have been strung along for 2, 3, 4 weeks thinking they're going to get a closing. And that person has no personal responsibility to you, or there's no relationship there, or really to the borrower. Right. And whereas, if you have that relationship, there's a personal responsibility. We have personal responsibility here, and we want to take ownership of that for you and the borrower.
Yeah. And there's a flight to safety. People want to go with name brand whenever it's kind of a time of uncertainty. And the bigger banks have been servicing their loans, and I'm not going to name names, but the ones that you're going to see the most extreme guideline changes from are the ones that have been servicing their loans. And their first priority is to protect their bank, even at the expense of a closing or, breaking a promise. And I've been on the Rockstars page where, loans were cleared to close, and then the loan was denied at closing. That was not by our company, and I'm not going to name any names, but you guys have seen that. We're not doing that. If we have a guideline change, we're going to still honor the people that we've already approved with that guideline before it changes. So that's a little bit about the overall view of everything. I know at all the sales meetings, I always talk about the market and what's going on. So just to recap, since we haven't had a meeting for a little while, the Fed did cut the rates to 0, but that doesn't cut the mortgage rates to 0. That cuts the rate that banks lend money to each other. And banks lend money, billions and trillions of dollars, constantly back and forth between banks, because that's how banks operate. Their daily business is by borrowing money from another bank. That's their operating capital. So that does not affect mortgage rates. What's affecting mortgage rates right now is the stimulus that the government's doing, which that's helping. But what's also hurting is the risk of no mortgage payments being made for 6 months. So banks have to evaluate that, and that's also affecting the interest rate. So we think, I'll say this, the industry experts are saying that we'll have interest rates in the low 3s and maybe below 3 once we're out of this whole economy shutdown, because when people can't work, they can't pay their bills. Once the economy reopens, maybe a month or 2 after that, you'll see rates start to go back down. But rates are really good right now. If somebody's purchasing a home, they could get like 3.1 or 3.2. I quoted a lady yesterday who's putting 3% down, and she on a FHA, not FHA, on a conventional loan, 3% down on an FHA. I repeated myself. Conventional loan, and she could get 3.2 or 3.3 on a 30-year fix, which is still really good. Yeah. With those little as 3% down.
There's a question here about e-sign closing right here.
E-sign close when 6 months pity paid back. We do. I'm not sure what you mean, Beverly. E-sign close. Yes, we do allow for e-sign closings. I don't know what you mean by when 6 months pity is. Oh, when is it paid back? Yes. Okay. So if somebody skips on the loan forbearance, they're going to pay that money back most likely. Now I'm not the bank that they're borrowing it from, so I can't answer specifically. But in general, they're going to owe that money whenever that 6 months is over. They're going to owe the whole lump sum. So if they're skipping $1,000 payments, then they're going to owe $6,000 right then
But
on
we
the 6
found that
months.
those guidelines are changing per bank. And
They're-
we used to have a loan like years ago with SunTrust because our loan was sold. And they sent disclosures, and I looked at those disclosures. I was like, interesting. So I pulled them up, looked, and it was little bitty fine print, like on the 3rd page, that you can do forbearance, but you're gonna owe that lump sum in 4 months, like they said that in the guidelines. And what's hard is that, you know, we know these guidelines, and we're even looking in the fine print for those kind of things.
Mhm.
So your borrowers and your sellers, buyers, they don't know. They just, it's easy to want to take the good deal. We want to believe that it's free, and they want to take it. But really, they really need to be consulting, either calling their loan company, which obviously we know there's 2-3 hours hold time for those to call your lender. But and even my son was like, can I take forbearance on my student loans? And as his mom, I'm like, absolutely not. You need to make your minimum payment. You need to make your $80 payment, because I know that it's so easy once credit gets wrecked, it's done. Like it's years to repair that credit. And so we tell people, if at all possible, please make your mortgage payment. Don't take the free lunch, because you want to build up that savings account. If you have that ability, make that payment. Because you saw, and we saw in 2008, where people didn't do that, and their credit was just trashed, for lack of a better word. And they didn't know. They didn't know that that was going to happen, and maybe someone wasn't honest with them. So it's just really important before someone just skips a payment willy-nilly, they really need to find out what those ramifications are going to be, and have to call their mortgage company or get online and chat with them and ask them whatever. But encourage them, because you could suffer. I mean, our whole, as an industry, real estate and mortgages, is going to suffer months down the road from people not being able to qualify from that happening and them not knowing.
Yeah,
So.
and to that point, I want to say this: if you have somebody that's thinking about selling their home, or if they're thinking about buying and they're thinking about taking the forbearance, you really need to call them and encourage them not to take it if they can. And here's why: is because what banks are not telling is that they're saying, well, it won't negatively affect your credit, which means they're saying we won't report it as late. Well, on a credit report, there are 3 types of things that are reported. They're reported if a payment is made, if it was paid on time, and then if it was paid late. So if there's no payment made, there'll be a 0 on that credit report showing no payment made. It won't report as late, so their credit score won't drop, but their payment history will show goose egg for every month that they didn't make a payment. So as a lender, we're going to look at that credit report and see, oh, this person took the forbearance, and there will be guidelines that are going to be written to address that. And I don't know what those guidelines will be, but they're not going to be positive.
Because they're thinking, if they had made their payment for 6 months, why would we lend to them now? Why would we do a loan for them now? And they've sold their house, and then they have no loan to.
They couldn't get a loan.
Right.
I could see that happening. I see that being a really big unintended consequence of someone taking the forbearance on their house payment, selling their house, and then you guys having to tell them, I'm so sorry, but there's no mortgage for you.
Right. Or we have to tell them that.
Or we have to tell them. We have to tell them that. And we don't, right. We don't want that to happen.
Right.
So you guys, please, 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 if you have sellers that are saying, oh, I'm going to sell my house, you need to call them now and say, look, make your payments.
Yeah, just continue.
Whatever you have to do, keep making your payments, because if you don't, there's a high likelihood you'll not be able to get another mortgage for. Now, here's how it goes right now. When somebody has a late payment on a mortgage, now it's ordinarily 12 months before they can get another mortgage. That's now. I don't know what it's going to be when all this is kind of washed out a month or 2 from now, but that's how it is right now. If somebody does not make a payment on time, we're going to make them have 12 months of clean payment history before we're going to loan them another several $100,000, because that's not making a payment shows inadequate cash flow in their monthly budget. And it doesn't matter how much money somebody puts down on the loan. What matters is what the risk of the loan not being repaid is to the bank.
Right.
So those are really important things to talk about with your sellers. I will say this: FHA loans have, and this is kind of a little bit of an outlier point, but FHA loans may be a little bit kinder about this skipped payments, but don't count on it. Okay, and I'm just I'm just saying that it's still being decided on what's going to happen with FHA loans, but because they have double the mortgage insurance for the bank that a conventional loan has, they're going to be a little more lenient. So just saying, but don't count on that as like the safety net for everybody, because it very well may not be.
Yeah. And then as far as the e-sign closing, Movement is allowing for the power of attorney for the borrower. So we just get those signed and they can send someone else to closing. But it has varied from attorney to attorney to attorney. You have to have an actual person right now sign those documents, whoever that is, like the attorney or somebody has to sign those, a person does. But we are working very closely with our attorneys. Like right now, I am emailing and calling all of our April and May closings and saying, hey, are you going to be in attendance at closing? Like everybody that's in our pipeline, I'm emailing them, because otherwise they're going to surprise us the day before closing and go, hey, wait, like I wanted a power of attorney. Can't my dad sign for me? Like he's a lawyer. What's the big deal? So I'm being proactive right now and calling all our April and May and making sure, hey, just making sure you don't need a power of attorney. Just making sure that, because we don't want that to hold up closing. So we're all about being proactive. And that's why I'm on John's team. That's why we've hired another seasoned loan officer at Movement, Brandy Lane. There's 4 people at any given time working on your loan and making sure it's monitored, where you're not in a, it's not like we're not Walmart. You're not in a big stack and maybe we'll get to it, maybe we won't, right? We're more like Target than Walmart. We're making sure you're taken care of. We're just assuring you that you are top priority in what we're doing. Even those little things like making sure your closing won't be delayed because the borrower thought they could have someone else sign and didn't understand they needed a power of attorney.
Perfect. Thank you. I have a couple other points on the COVID-19 impact, which is now all banks are calling the borrower either the day of closing or the day before closing to ask them if their income has gone down either in hours worked or hourly wages or any type of reduction in their pay. And if the answer to that is in any way, yes, my income has gone down, that loan will not close that next day. It's going to go back into underwriting with proof of whatever that new lower income is to see if the borrower can qualify on that. And
we're asking those questions. We ask those questions like right when we get the borrower, is there a potential for your income to be decreased? Could your hours be cut? Right. We're looking to solve those problems up front, not react to them later.
Right. But we're required, and it's a disclosure thing. The borrower has to tell us. In some cases, we're having to ask the borrower and not their employer. In the past, we would ask their employer 5 days before closing, but a lot of employers don't have somebody available at an office telephone number, and we always have had to use a landline number to an identifiable person that we could verify works there at that company, and that person would verify this. Well, we can't do that now, so we're having to rely on the borrower to tell us. So if you have deals that are going under contract now, you want to have that conversation with your borrower now instead of waiting, because a pay stub is what we use, and pay stubs are always about 30 days old whenever we get them. And we can use a pay stub that's up to 60 days old to close a loan. So that wouldn't reflect a decrease of income. So it's very, very important. If you know or hear something, you need to, let us know. So that there's not a closing that all of a sudden can't happen because that information was not shared openly in the beginning.
And who's at risk there? So you're talking retail people, retail. You're talking even some healthcare people who are in healthcare, daycare, anything that's a service provided, obviously that has to do with people, like it should trigger something like immediately, like
airlines.
For you,
airlines,
right.
Anything that's a retail face-to-face type of a business.
Yes. Those are triggers for us to know to ask the deeper questions.
Yep, those are vital. I have a couple of other things here. One other thing that we're seeing is when you're making an offer on a home, you want to make sure to ask whoever the lender is, what are the closing costs? Because part of what offsets the risk to the banks of somebody not making the house payment is discount points. And I'm seeing discount points on a lot of loans that are below a 700 credit score. In fact, almost every loan that's below a 700 credit score is going to have some discount points. They may be very small. They may be only like $500 or $200, but what you don't want is a surprise where you know, you've been working with this borrower for a month or so, and now they're ready to write a contract. You write up how much you think they're going to need for closing costs, and then all of a sudden it's not.
We've seen loan estimates up to $6,000 discounts point come across our desk
from
that other people are sending us saying, can you help here? I don't know what happened to the closing costs. My borrower's not happy. And I'm looking at the loan estimate and I'm like, well, there's a $6,200 discount point right here, right? And yeah, they got a 3.5 rate and they're really happy, but why did my closing costs go up $6,000?
And that's all because of the CARES Act and the risk of a non-payment from a borrower, particularly if their credit scores are below a 700. So just be on the lookout for that. I also encourage you guys, when you're making an offer on a property and you're the buyer's agent, have the lender call the listing agent. I've said that a lot of times at the sales meetings, but it's never been more important than now, because the loan officer can share those vital details about that loan. They can share what type of employment this person has, that they have not been affected, their income has not gone down any, their credit scores, you know, are good. All of those types of things, and to create a line of communication, will help your offer get accepted just by that communication from the lender. Because everybody knows right now the mortgage industry is in a state of flux and it's very fluid right now. And given that listing agent the assurance that this loan is going to close, will get your deal accepted. So I just really, really encourage you guys to do that. That is going to save you a lot of time and money. Also, if you are the listing agent, you need to pick up the phone and call the lender and ask them those questions. Say, is this borrower's income safe from any type of disruption? You know, how do you feel about your ability to close a loan? I have a whole list of things. If you'd like, I can repost it, but I hand it out at almost every sales meeting. The 14 questions every listing agent needs to ask a lender before they accept an offer. Those things are absolutely vital. For the interest of time, I won't go over them all now, but those things are vital, because you don't want to take your property off the market, especially now, only to find out there's a problem with the loan that you could have, you know, discerned a little bit earlier. And if you have questions about that and you're saying, oh, this sounds something, you know, something doesn't sound right, call me and I'll tell you how to dialogue with that lender so that you're able to get the right information and not put your seller at risk. And then the last thing that I wanted to just highlight on one more time is about the e-sign. So about a year ago, Movement did two really great things. We had all our employees be set up to work from home in case of inclement weather. So for a whole year, we've been able to work remote, and that's partly, I would say, the main reason why we've been able to continue processing and closing loans the same way we have. Also, we work now 24 hours a day, not me and Christina, but somebody at Movement is working.
We have 14 hours a day.
We've been 14, yeah. We've been putting in a lot of hours because there's a lot more work that takes to get a loan closed. But somebody's working 24 hours a day at our company. Also, the other thing that we did was we started sending out the documents to the borrower the day of closing, like in the wee hours of that morning, around 2 a.m. We've been sending them their closing documents to e-sign. There was only 2 pages, I think 2 or 3, that had to be hand signed that they did not get, but we would send them everything else. So we've been doing the e-signs for almost a year now, and we're still doing that. But if they do want a power of attorney, we do need to know ahead of time and set that up.
And we actually have been hiring. When other places are firing people and laying off, Movement is hiring people, and we're training people. So we've got Movement University where we train our own people, and we've been actually hiring and growing, trying to staff up because we want
the demand.
Your purchases to go through just seamlessly.
Yeah,
I mean, it's definitely Movement is a realtor-driven company.
Yeah, we hired 200 people this month. Well, I would say in March we have another 200. We do a class. We run ads, hire people. Out of about 1,000 candidates, we'll hire around 200, and but we're hiring 200 again in the next 30 days. So
any
we're
more questions?
really staffing up.
I love questions. I like the question in chat thing. Do you have any more questions as far as like nothing too small, but like sometimes I even get people to email and be like, hey, can we have gift funds for a second close? Like I get an email real quick from a realtor, you know, like just shoot us your quick questions even through an email. Mine is really easy. It's just Christina.Bohannon at movement.com. Just like John's, but it's just Christina, CHRISTI in the beginning. And if you can't get John, you can get me. We sit in the same office. So I'm telling you, you're getting 2 for the price of 1. We can answer any questions you've got, and it's literally no question too small. Just let me know. Like, you know, if you can get him, it's easy. I mean, if he's on the phone, I can definitely answer those guideline questions or anything you need. You can email me, text me, that's, I don't know if our number's in there. I can put it in the chat.
So put it in the chat.
Do we have, where's your keyboard?
It's
Keyboard?
right here. Yep.
Okay, yep, I can put my email and everything in the chat so you have it.
Perfect. All right. Well, I think we're done. Heidi, you want to take back over?
Yeah, I will take back. Let's see. All right. All right, I've unmuted Doug, unmuted Lee. Let's see. Did I unmute Lee? Did I mute Lee? Come back. All right. All right, so Doug, can we hear you?
I can hear you, Heidi. Can you hear me?
Perfect. I can, and I think I finally got Lee unmuted too. So you guys are unmuted. Everybody else still good. So go ahead and feel free to get started.
All right, thank you. Heidi and Dana, I want to thank you for having us today. We are proud to be part of your team, even if it's only virtually today. I wanted to speak today with a little bit background about closing options, especially with respect to video closings. Many of you likely have some questions about video closings during the pandemic, and I wanted to give you just a little bit in the way of background. First is with attorneys and the practice of law. Georgia law stipulates that real estate closings are the practice of law and therefore have to be done by licensed Georgia attorneys. The Georgia Supreme Court regulates attorneys and the practice of law. They previously determined that an attorney must be physically present for a closing. In view of the pandemic, the Supreme Court released a judicial emergency order, which has since been extended to May 13th, allowing the participation of the attorney by video conference. And that was the first step towards getting video closings approved. Second step is the notary public and physical presence. Georgia law states that a document to be recorded in the deed records, real property records, must have the grantor's signature and the signature of 2 witnesses, one of which must be a notary public who also affixes their notary seal. And Georgia law states that the signatures must be in the physical presence of the witness and the notary. The governor passed an emergency order that stated during the time the state of Georgia is under a public health state of emergency, physical presence may include the use of, quote, real-time audio-video conferencing that allows the parties to communicate with each other simultaneously by sight and sound. So the governor's order was the second step for the witness and the notary. So if the attorney can be remote and the notary can be remote, we're all set for video closings, right? Well, there's a little more to consider. First thing to consider is title insurance company approval. Each title insurance company has their own requirements to make sure that closings and that the title from closings are insurable. They have similar but slightly different requirements, including recording the entire video closing and keeping the video for a period of time. They also require lender approval to conduct the video closings. Lenders sell their loans in the secondary market, and they want to know that their loans will be able to be sold in the secondary market. After all, who wants to make a product that you can't sell? So far, Fannie and Freddie have not yet fully approved the use of video closings. Although some lenders have approved them, some of the larger lenders and some that sell to Fannie and Freddie haven't. So what about electronic signatures? A lot of firms, including ours, will allow some of our standard documents to be set up for e-signatures. However, once again, a pacing item is going to be lender acceptance of e-signatures. And regardless, some documents like the warranty deed and the security deed, they still have to be original ink signed documents with a witness and a notary. So what are the logistics for a video closing? Remember, ultimately, all documents have to have wet ink signatures by the signer, the witness, the notary, and the attorney, although the attorney may function as either a witness or a notary. So the documents must be sent to the signer for signature, either by overnighting a paper package or sent electronically, which the signer then has to print out. As a practical matter, a typical loan package is 100 pages plus, and I don't see any borrower being able to print a 100-page loan document at their home. So if there's a loan involved, we're going to pretty much have to be overnighting or couriering paper packages. The signer then signs the documents on a scheduled video call with the attorney, the witness, the notary. They overnight the documents back to the attorney, who then still has all the witness, notary, and attorney have to sign, and the notary affix their seal. The closing won't be completed until all of the documents are returned, witnessed, and notarized, and all of the other requirements, lender funding approval, the other party's signatures, and so forth. So we're building in a day of delay in terms of overnighting documents to a borrower, doing a video closing with a borrower, and then having the borrower get out and get those dropped back in FedEx back to the attorney. The other question I get is a video closing the same thing as remote online notarization, which is also called RON? And the answer is no. You'll hear those terms, but they are completely different animals. RON, or remote online notarization, in that system, the notary uses a two-way audio-video link to watch borrower sign the documents, but then the notary affixes a digital seal and a digital signature. The notary never gets the paper, puts a wet ink signature and original notary seal. RON was considered by the Georgia legislature earlier this year, but it wasn't approved. And the online video process that is now approved is not RON. There's no electronic signature, no electronic notary. The documents still have to be wet ink signature by borrowers, witnesses, and notaries. Also, if you have a borrower in another state where RON is approved, documents signed by RON in another state are not acceptable to be recorded in Georgia. So even if your borrower lives in a state where RON's approved, we can't use a RON signed document for recording in Georgia. So what about real estate closings that some we're still holding in person? Real estate closings are defined as essential services, and therefore they're not subject to the mandatory shutdown. We follow all the CDC recommendations for things like sanitizing our conference rooms, wiping down common touch areas both before and after closing, limiting the number of people at closing. One thing that we've done when we're still doing physical closings is always trying to schedule buyers and sellers at different times in order to minimize the number of people in an office and help maintain social distancing. One question I get from agents is, should I still attend a closing? Some firms had said, we don't want agents coming to closing. They're not permitted. We did not take that position. We think what you do is important and that you have a role, but we have also asked, consider whether you really do need to attend that closing. We can always give you the option to participate, even if your buyer or seller is signing in person. We can set up a Zoom closing and pull you in that manner. You know, we do leave it up to you. We would encourage you, if there's no need to be there, then don't attend, and let us remote you on if you like. All of that said, I wanted to, the other thing that's come up is power of attorney. And John spoke to it earlier. There's a couple layers to power of attorney. One, pre-pandemic, we've always used power of attorneys when a party wanted to do so and the lender approved it. And that's still possible. But what some people are doing is giving a power of attorney to the closing attorney. And we feel that is an inherent conflict of interest. In Georgia, attorneys represent lenders at the closing, and there's no good way that I can sign at the same time, have somebody at my firm sign on behalf of a buyer while I'm representing the lender. We've asked our title insurance companies for guidance, and they've said, well, we'll insure it, but we won't guarantee that you're not running afoul of your ethical violations as an attorney in who you represent. So we've kind of got some conflicting information from title insurance companies in that regard. With that in mind, I did want to throw the floor open for questions. See what you thought, what you'd like to know. Before I do, I'd like to throw it over to my law partner, to Rich Shafritz. Rich, is there anything that you'd like to add before we open it for questions?
Doug, I'd like to thank everyone for being on the video, and it's great to have somebody like John, who is a leader at Maximum One, and or at Movement, excuse me, and we're very, very lucky to have him on this call. It helps for us to be coordinated, and I will tell you that one thing you didn't mention that we are doing as well is the curbside closing. If parties want to do a curbside closing, we are absolutely accommodating them. Our goal is to close as many transactions as we can, of course, but to do so in a safe environment, in a comfortable environment for everyone. And our goal is to make sure that we meet the needs of the consumers, as well as protecting everybody's safety. So there are folks that want a curbside closing. There are folks that want to do a traditional closing. We really have not only encouraged but insisted on separating the parties, because our thought process is, if we do that, we've only got 3 or 4 people in a closing room at any one time. We discourage anyone who is not essential to the closing from appearing in person. The power of attorney closing is a major concern, and attorneys behind the scenes are raging in debate on this issue. We are looking at it as a possibility if the e-closings or not e-closings, but the Zoom video closings, as they're being called, don't really catch on. I am curious, because one of the big disappointments for me is behind the scenes, along with a lot of individuals, lobbied our governor, and I was one step removed from the governor, and I was putting information in front of him regularly. I thought the Zoom closing was the best solution, and I still think it is. And if it's accepted by all lenders, and that's going to depend on whether Fannie, Freddie, and FHA, VA investors give that kind of guidance. If they start doing that, to me, that's better than asking a closing attorney who has no knowledge, no relationship with a buyer, to execute documents on their behalf. Now, if we start doing them, we're going to send the packages off to the buyers, and we're going to have them electronically sign the documents for our benefit. But I'm curious, my question for John, and then I'll open it up for questions for everyone, is, you know, what's Movement's position right now? I didn't quite hear you discuss the Zoom closing, so I'm thinking that you all may not approve of them yet.
Yeah, we're aware of the Georgia law on that, but we have not made an official decision on to allow them or not allow them. You know, we're having to rely on where the loans are going to be one-day serviced. So even though we're the servicer now, we don't intend on being the long-term servicer. So we're really looking for Fannie, Freddie, and HUD to give us guidance on that. And since they're government agencies, you know, that's kind of where the cog in the wheel is at the moment.
We're getting constant communication that those are emerging and in process. So those are the wheels are turning. So it's emerging, and right now is the best we can say, is that kind of a closing. It's emerging for Movement.
So when we're working together with Movement, which we always enjoy, you guys have a great company, and I mean that you all have been working with our firm for years on different transactions. We are limited to the curbside closing, the in-office closing, and we are investigating on our end the power of attorney closing, but we're not doing them yet, simply because we don't think that's in the best interest of. We don't think it's in the best interest of the lender, and I worry that long term it could be something that's used to push back on purchasing loans, even though Fannie and Freddie have said, I think Fannie definitely, has Freddie agreed to the power of attorney closing?
I don't know. I know Fannie has.
Yeah.
So, you know, and we can easily choose between where we're going to send the loan, either to Fannie or Freddie.
We're heavy Fannie than we are
yeah,
Freddie. We're more Fannie than we are Freddie, but we do Freddie. Yeah,
we do Freddie.
We always run
when
our
we need to.
loans both.
Yeah.
To see if we get that appraisal waiver. But yeah.
Well, I'll turn it back to Doug to moderate and liaison with us as well. And thank you all.
All right. Well, thank you. What questions do you have about closing in the age of the pandemic? Not seeing any questions yet, which either means that you already knew it, or the information I gave you was helpful and answered your questions. But either way, should you have any questions, I want you to know, John mentioned it as well, that you're always free to call him with your loan questions. You're always free to call Matt Skirman, Lee Pruitt, Rich Shafritz, myself, any of our attorneys with any questions that you have. And we're always proud to be able to help you out.
I have a question. DAs, are you guys allowing agents who are not present at the closing to come by and pick up a DA? Or, because typically we don't allow DAs for agents who aren't present, but given the circumstances, what's your policy on that?
We're trying to minimize the number of people coming to our office, including people picking up checks. And we're always happy to overnight them. So we can certainly, if you approve a DA, certainly overnight checks to your agent or to maximum one. But we're trying to discourage picking up checks. I know that it does and will happen occasionally. We're just trying, like everyone, to minimize contact and minimize appearance.
Not only that, let me jump in and suggest too that the DA is sort of by broker. We have brokers that allow us to disperse without the agents being present. present. And historically, we've done that. The other thing I'll mention is even better than a check is if the agents can get us wiring information, it's going to hit their accounts a lot quicker. It's going to avoid them having to go to the bank. And we're doing a lot of that as well. So a wire to me is the optimal way to, to disperse funds right now to the agent community.
Rich, and that's a great point. And we do have some agents that have given us their wiring instructions, and we've been able to wire their commissions. The benefits are it's quick, it's secure, it's trackable, and typically your bank won't put a hold on funds received by wire. So you can get the money same day, quickly, securely, without having those funds being held, and save you a trip out and about.
Yeah, and also for our agents with the limited hours at Powers Ferry right now, if you're having your attorneys mail, will be better than overnight, unless we want to overnight it to West Cobb, where there's somebody there all day.
Thank you for pointing that out. We are running into, with businesses working from home, who is available to receive FedExes and things like that. So thank you for mentioning that.
Can I just say one other thing? And it is a really challenging time for everybody right now. John mentioned it's business as usual, but I know that for all of us, it's not living as usual. And this is going to pass. And we sent out some statistics. If you get our newsletter, Nerd Wallet or Wallet Hub, I can't remember which, says that Georgia is poised to be the least impacted economy by the coronavirus. And they give the reasons why, and they list the states, and we are very blessed that we also live in the fourth largest metro community in the country in terms of growth over the last decade. So coming out of this corona crisis, we are going to be poised for a huge bounce back. So everybody, I know it's tough right now, and a lot of extroverts probably are on the phone, but we're going to get through this, and Shafritz and Dean is here to help you all any way we can. Even if you want to just call and talk about the market or talk about how we're closing, issues that we're seeing, we're here for you, and we appreciate you very, very much. So thank you.
Absolutely. Thank you.
All right, we appreciate that. If anybody has any questions, you can unmute yourself down at the bottom. Just slide your mouse down to the bottom of the screen, or feel free to type in, or as we mentioned before, you can always call or email. Did anybody have any questions for us here at Powers Ferry? Oh, George wants to know if we would do closings at the office, at the Powers Ferry office. Are you guys doing closings at our office still?
We're proud of the space that we have that we share with you. We've been trying to limit our exposure and limit us getting out and about as well. So pre-pandemic, we're excited to have our office at your location set up, but for now, we're trying to limit where we go as best we can. So to that extent, we'd like to explore all of our other options for getting deals closed.
All right, thank you. All right.
Okay.
Does anybody else have anything? Any questions?
Any questions?
No questions for you, Deb. All right, guys. Well, I appreciate everybody's information and appreciate everybody joining on, and ask that, definitely, please, if you would just, you know, feel free to reach out. I'm available normal business hours, even though I'm not at the office right now. So, yes. Thank you. Sorry, guys.
Sorry, guys.
We're gonna, but yeah, feel free to call or email me as well if you have any questions. I'm available even though I'm not at the office. All right. It was great to see you. Great to see you guys. Have a great day. Thank you so much.
We're just happy.
Thank you, Heidi.
Thank you, Bardol.
Say bye.
Bye, bye.
Bye.
Bye. Thanks, everybody.
Bye.
Check it out.
All right.
Bye.
Very cute.